In this video, we are going to be analysing MGM, a resort ticker MGM. Now, what was quite strange to see is we can see they are up 7.5% today, or closed up 7.5% today. But surprisingly, they had news, or they had earnings. I think this was actually yesterday. We had a big gap down. Obviously, this was the first time, I think, in quite a while that they've taken a negative earnings per share. We can see, the three previous quarters, they made money. This one was down and down by quite a lot. So I'm surprised it didn't sell off more, and I'm surprised we're getting a reversal so soon off this news. But what is the key thing to be looking out for on this kind of move is really, if you go back, and we just did a DraftKings analysis video uploaded before this, and we said we have two plan of actions. When the level, or when you kind of get this earnings news, the key thing to always know is where we open next. So we obviously closed at 31.40. The key thing we would be looking for is, are we opening the next day below or above this level? And the reason we want to know this is overnight, people have a long time to think about, and traders and investors have a long time to think, was this an overreaction? On MGM, for example, they've taken this as an overreaction. So as soon as you open above this level, that is a good indication that we're just going to gap and fly, gap and go. And that's what we saw today. We opened at 32, we flew to 33.90. And again, how will you trade this? You just have a stop at that candle low. And that's really a good indication or way. Obviously, sometimes that can be a bit of a wide stop. In this case, that's quite a wide stop. But that is one way you can trade them, because if you open above, again, it's showing investors overreacted and it's a good bullish signal. On the other hand, if you opened below this 31.40, good indication that we are bearish and we continue that downward trend. So again, I'm just going through that because this example played out, and this is what we went through on DraftKings, the previous analysis video that we just did. So if you want to just see what we mean by the how it can play out, that is what we are talking about. But to get onto the more technical levels, one thing I want to note while we're zoomed in is the gap fill location at $35. We can see, yes, today has been quite bullish. If we continue this upward momentum, look for that gap fill at $35. Now, this is when I would flip more bearish on the stock, because look what we have coming into this level. We have a first deviation at 34.40. Again, expect a pullback coming into this level, but if we break it, look for the gap fill. And right below, past there, we have at 35.33, we have our first deviation on the daily. So really, if we break through this 34, expect kind of a snap or a quick move to 35 to around 35.30. That now, gap fill, first deviation on the 1 year chart, this is going to be a heavy resistance. And considering that earnings were bad, I do think the stock will downtrend. You can just see, I mean, these volume candles here just show you how much buying pressure, how much selling pressure. Obviously, on their red day, over 15 million shares traded, basically all red. Obviously today we can see the majority, or probably about 98% of this candle is green on bullish momentum. But again, this might be just a temporary bounce, and to be honest, on their bad earnings, I would be thinking this is more temporary, considering just how bad the overall markets are at the time being. So again, I would be looking for that break of 34, look for that snap fill, and then really expect, I would be more bearish on it, expecting the move to continue down. So that's what I would be looking out for. Again, obviously not everything's going to go to plan. If you're trading that way, might be something I personally trade. Just be having a stop. Really, if it goes through by 20-30 cents, it's probably going to fail. It's not just going to fill that gap and crash, because they tend to do it near enough to the cent. So really, if you break through really 35.50, it's probably going to fail. So you can get quite a tight stop on here, good risk to reward. And this is why I'm just kind of mentioning this trade idea. Again, you don't have to trade it. It's not financial advice or anything. It's just an idea. See how these gap in the past. Do they have these big gaps, and then do they crash after? Again, just something for you to test for yourself. Something I've observed does tend to have quite well. It either works instantly or doesn't tend to work at all. So again, you can have tight stops, really good risk to reward, especially if you're trading it through something like options, which is probably how I would go about trading this myself. Anyway, onto the more technical levels. To continue going through these levels, what else are we paying attention to? Now, if we continue up through that level, we are looking at 38 as our next resistance, going on to 41. Going further would be 43.55. Final level is taking us to 46.50. $48, and a final level at $52. Now though, quickly to note the support, and one thing I will want to go through after, so definitely stick around for that, is we do have supports at $30, well $29.70 to be specific, but $30 again, be looking more at that because that is going to be the key psychological level as well. Now if we break this would create some concern on MGM, because we can see this has been a high, well just really a strong supply zone as it is. As soon as we come into this zone we seem to keep seeing buying pressure kick in. So if we break this, a good indication that a lot of stops will be triggered and we will kind of just continue to the downside. We'll most likely break that 52-week low and continue down to at least $25. If we break that, we are then looking at $24, $20.50, continuing down $18.50, $16, and at extreme levels $12.75, $11.50, and $7.20. Now, there is a lot of lines on these charts. Yes, I know that. How do you trade this, and what do you need to pay attention to? This is how I would look at it. Don't pay attention to any other lines. Those levels are more. If you're watching this video a month, 3 months down the line, you want levels, price is not where it is now, you have levels. So that's what it is, just keep you prepared. We always like to plan ahead. We never know how stocks are going to move. Is it going to move up 50%? Who knows? And if it does, we want to be prepared on that kind of news. Now, this is what I'll be focusing on. We are currently sitting at $33. Are we going to continue up? If so, can we break $34? If so, then your key targets are $35. Now, this is what I would be watching really key. Will it hit this level and fade instantly down? If so, good indication that we'll continue at a minimum to $31, but I'd be looking more for around $30. Now, again, you can have a tight stop on this kind of trade. If it doesn't work instantly, it's probably not going to work at all. And if it doesn't work, what is in your target to the upside? $39. So again, that's how you use these levels. Just look where you are now, and then your target is that closest level, 30, 34, 37. If you break that, then your target goes to the next level, and then the next level. If you break that, then the next level. And that's really how you use these levels. You don't need to be paying attention to all of them, just pay attention to where we are closest to now. Now, again, one thing I just want to note, and again, this is more of a trade idea. If you just want to know the levels, there you go. You don't need anything else. But really, again, you don't actually see this all this often, or not in this kind of reaction. This reaction was kind of surprising to see. We had their earnings gapped down massively. Again, what we expect to see, we talked about this in previous videos. If you gap down usually more than 3% on fundamental news, it will be a gap and go. What do we mean by that? You open, you crash. Or again, if it's the other way, you gap up 3%, you open, you fly. So that's what we saw here. Again, with these kind of trades, you can get some good risk rewards. You can have like a 25-30 cent stop. You can look for a point on that trade. We saw that. And then it kind of steadied out. Again, we'll zoom out a bit more just to make the trade idea a bit more clear. But then obviously we had that sharp momentum. You tend to see this. You see either one of two things. You either see it continue to crash down, not crash down, you tend to see a strong momentum first, kind of like we saw here, and then just a slower fade into the rest of the day. Or in this case, you kind of just pull back and you kind of consolidate in this level. You can see got that big swing, and then we're kind of just consolidating from there. Again, another common thing to see. Now, this was a bit different. You don't tend to see this kind of reversal look. So again, we closed at around 31.40. We opened that next day at 32.30. Now, obviously, that is a big gap to the upside, just on recent previous bad news. Up nearly 3%. So again, not something I would have gapped and goed, but if we opened up that kind of far up, it does indicate we are now more bullish on this stock. The previous day was an overreaction. How can we trade it? Again, wait for a pullback to a big or key EMA. Ones I usually use, again, I don't really trade too much off the 1 minute unless they align. But you can see perfect entry on the 50 on that pullback. But again, I prefer the longer term time frame. 5 is even quite quick. Usually 15 is even going to be better. But again, you got that pullback. You could have waited for that kind of 50 or 100, whatever you prefer. Pull back to both of those, and that's when the trend then continued. So that's really the key thing. I just kind of wanted to know how you can look and start things to maybe you start observing, even if you don't want to trade them yet. How observe them, how to trade them. And again, 15 probably the ideal time frame to use. Really going to be much stronger levels. You can see hit it to the T. Especially, yes, it's a bit later in the day, but gapped, go, came back, and that was at key level. So just wanted to give you some observations, maybe things to look at, help you with your own trade ideas, but the key levels are the main things in this video. Those are the things to pay attention to. Anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.